Welcome to the Millionaire University podcast. I'm your host, Brian Guerin, with you today. And on this edition of the MU Pod, I'm joined by Dan Uyemura. He's the co-founder and CEO of PushPress. It's a hassle-free gym management software that helps fitness businesses thrive. Dan, welcome to the show, my friend.
Thank you for having me on. Excited to share some of my story and hopefully provide a little feedback and insight to some of the listeners out there.
Yeah, this is fun. I'm excited because I think I haven't had a chance to interview someone who's a founder or co-founder of a CRM type of software, especially one that relates to a lot of clients that I have in my own personal business, being in the gym space. So I'm really excited to check out, learn more about PushPress, but also learn more about your story, about how you got into the tech world and then into the gym space, and kind of learn about the catalyst that maybe the catalyst that kicked off the invention of PushPress. So we're going to talk about all that. We're going to talk about your business in general, but I would love to give some context to our viewers here. Who's Dan Uyemura, and how did he get into being the co-founder and CEO of PushPress?
Yeah, I guess, who I am as a person. I've always been that kid who didn't do quite that good in high school because I was bored, I guess, or I was talking too much or whatnot, this, that, or the other. Kind of learned how to play the game of high school, somehow got into college. I definitely couldn't have gotten in today. It's way harder today. And I think as I was learning myself through the college years, I started to realize I was entrepreneurial. So a lot of probably that misguided youth was I was just bored because I wanted to do things. I wanted to build things instead of learn about how to build things, which I saw on your homepage was one of your kind of credos.
Oh, yeah.
That was me. So coming out of college, I graduated college, not to date myself, but around 98. And right around 98 was when the internet started kind of like becoming pretty commercially viable. So the most entrepreneurial thing for me to do was learn how to code the internet, if you will.
Mm-hmm.
So I came out of college and I started a business like building websites for local businesses. And this is pretty early when websites were just basically brochures online.
Right.
Quickly learned how to connect a database to a website, started building like database-driven websites, and actually built this thing called Mixture Online, which was kind of like MySpace and Friendster in 1999. And the guy who paid us to build it never paid the bill, so we just took it over.
Oh,
And when we took it over, we turned it into this like flourishing community of college kids and we've kind of focused around like night clubbing and extreme sports. This is when the X Games were taken off.
mm-hmm.
And some of that stuff. And it kind of became, I think that started my passion for starting companies because like, I think we grew to like 250,000 users or something. It actually was pretty successful for being like a server in my closet at my dorm room or whatnot. And from there, we kind of blew that up with the dot-com bust. Like we got investors actually invested in it. And then the whole thing blew up when the dot-com bust blew up like in 2000. But to keep scratching my itch for that entrepreneurialness, I just went to work for a whole bunch of startups in LA. So I worked for some AOL subsidiaries. I worked for MySpace at one point. I worked for a bunch of these startups that were building stuff in LA. And I eventually just got tired of coding because the thing I didn't realize about coding is they just want you to sit at your desk and code all day. They don't really want you to go home. They don't want you to go get dinner. They want you to code. And, I put on 30 pounds. I was starting to feel like just be unhappy with my life. And I got a severance check from MySpace. They like laid me off at one point. And I was like, I'm just going to roll this over and open a gym because I've always been athletic. I've really gotten away from that for the last decade of my life. And I just kind of recently rediscovered fitness again, CrossFit specifically, and said, you know what? I'm really into this whole fitness thing at this point in my life. And I want to get away from coding so much. So I want to go open a gym. And the first thing I did when I did that was look for software. And a couple things happened when I was looking for the software. One, I don't want to say ripped off, but I got manipulated in the process of looking for software, in that I thought my payment processing rate was 1.9%. Like I had spent literally a month of my life trying to negotiate it, got it down to 1.9%. And then one of my members came into my gym, an early member, and he's a banker, and he told me it's just impossible the way that we were running transactions, which was without a card. It was virtual. There was no way you could pay 1.9 because that's over interchange, which I didn't know what interchange was. And so he took my statements, broke it down, and told me I was paying 4.8%, which totally pissed me off. And then I kind of realized when I started talking to other gym owners that everyone thought they were paying 1.9%. And as I looked at their statements, everyone was paying over 4%. So this lie or whatever it was being perpetrated throughout our industry. The second thing that happened that I didn't expect was because I was a technologist opening a gym, I started helping a lot of gym owners do technology. So like, how do you build a website? How do you build a landing page? What are ClickFunnels? You know, like all of these things that were happening at the time, I was helping people do. And so I didn't know that there were like online communities of gym owners, Facebook groups, Reddit groups, stuff like that, that people hung out asking questions and helping each other. So I ended up helping a lot of people technologically wise. And when you marry those two together, like I'm talking to a lot of gym owners, I'm finding out that the problems are everywhere. No one's really happy with their software. I ended up writing my own for my first gym, but I really just crammed it together just to make it work for my gym.
Mm-hmm.
Gym owners started asking me like, hey, what are you using? That looks different. Like I've never seen that one before. And I'm like, oh, I just built it, but you can't use it because I didn't make it that way. I got enough people asking me that I realized the opportunity was there to actually probably build something better from the lens of the gym owner. And so that was kind of the first iterations and origins of PushPress.
Wow. Okay. So in time frame, this was back like 10, 15 years ago?
This was 2010.
2010. Okay, gotcha. All right. So you're getting feedback. You're running your gym. You built your own software. People are asking for it. Other gym owners are asking for it. What was that kind of that motion point for you, where you were like, did you still maintain your gym and then start PushPress and start building software, doing it on the side and building it up? What was that moment like for you when you're like, all right, I gotta go do something with my tech side now, and it could be big?
Yeah. So to answer, yeah, directly, we actually built PushPress from like 2011 to 2013. It took us a good 2 years to get it ready. I happened to be opening my second gym in 2013. So that second gym was our first client. It would be like a test client.
Mm-hmm.
Ironically, that literally like the day or two after my gym opened, another gym became a client. And we thought this is gonna be so easy. Like we already got our first real client. Nothing could be further from the truth. It was actually really hard. We lucked into that first client, but then like the next 100 were really drawn out.
Mm-hmm.
And in terms of like when I went all in on PushPress, it was actually almost a decade later, 2019 is when the opportunity was clear and present with PushPress to the point where I had to sell my interest in my gym and focus 100% on PushPress.
Okay. So give us a little a couple notes on where PushPress stands today. Where are you guys in terms of other players in the gym, the fitness market for software? And if you're willing to share what your general approximate revenue is per year, what type size company are we looking at?
Yeah, so we're about 15 million in revenue. I don't know where that places us against our competitors. I don't really care. In terms of competitive positioning, I know we built a pretty good brand for the people that we service well and the people that are kind of like within our area of, I guess, service. Still, 9/10 of the world have no clue who we are, if not more. And that's okay as well. I hope and I like to see us as forever the underdog. I don't ever want to be the favorite in
Mm-hmm.
this. Like, I think there's a really interesting position to be. And so we're positioned around the defense of the gym owner. So again, like that experience where I got ripped off and I saw the gym owners got ripped off, I started to realize like across the whole industry, this was just the norm in general. Like even yesterday, I made a post about how one of our clients was getting screwed by a big software company because they locked them into a contract. And like, why do they do that? Like they sell them artificially high rates. They present a contract and say, if you sign this contract, I'll lower it back down to what the rates probably normally should be. And then the person's locked in. And then when they want to change their software, they're like, cool, give us $4,000 cash and you can change software. And to me, that just goes against everything that's like how you should run your business, because all you've done to that person is guarantee that they're going to leave you once they can. Like you've entrapped them.
Yeah.
And who wants to be an entrapped customer?
Right.
You know? And so like these practices I see throughout our industry, and I'm like, we're going to build a business that actually is in defense of gym owners. We'll help them leave if they want to leave. We'll help them come if they want to come. Like this should be, everything we do should be in the benefit of the gym owner, because right now it's like they're getting the raw end of a lot of these deals that are happening. So that's kind of just philosophically why we position the way we have.
So what are some of the bullet points along those lines of things that you do differently that you feel some of these bigger dogs or software companies are just screwing people with?
Well, I mean, a lot of it's just in transparency, right? What our pricing is, like that whole payments debacle. I just started to notice like the payments thing was a trend. They were using it as a lever to make revenue, but they were kind of like obfuscating it with all these layers of weird fees and Some things got billed to your bank statement, some things got billed to your software fees, some things were billed to your merchant account. Like they had fees spread out everywhere. So there's a lot of it has to do with transparency. A lot of it has to do with how do we think about building like the best software practices that work for gyms. So a good example of this, and I just launched a podcast on this, ClassPass, right? If you're not familiar with ClassPass, it's a consumer model where you can pay them $100 a month or $50 a month, whatever their pricing is. Their pricing is, again, non-transparent. It varies based on the city you're in and all kinds of things, but you pay them a certain amount of money. Then you get to go to any of the gyms in the ClassPass network, and depending on which gym you go to, that gym gets paid a cut. But what we're seeing is that cut is astronomically low, like as low as $4 per class, you know? And it's like, the gym owners get hooked on it because the problem they're trying to solve is they want leads. And a new face in a new gym in your gym feels like a lead. But if this person is signing up to be transient, because that's why you pick ClassPass, you want to try 18 different gyms, you don't want to join one. That's not really a lead. That's a person passing through your gym. So you get $4. You're going to treat them like a lead. You're going to spend a lot of attention and time with them. They're going to disappoint you ultimately, but you're going to get hooked on this cycle of like, but I've got all these new people coming in my gym. And it's slightly deceivious motion, in my opinion.
Yeah. That's a tourist. That's not a lead.
Exactly. And the big problem I have with it, if you want to cut all of that out, other than that, they're kind of selling to the fact that like you're emotionally hooked on the leads, but you're not really going to be able to convert them, is they basically taken the economics of the gym and made it theirs. So if you join my gym, you're going to pay me $150 a month. You get to come 15 times a month or whatever, $10 to check in, whatever it might be. And if you only come 8, I make $150. What ClassPass has done is they're charging the $150, and every time they go to a gym, they'll give you 50% of whatever they're making off the person, or whatever percentage it is. They're giving you that fraction, not even the whole thing. But if the person only goes 4 times instead of 10, they're keeping the 100% for themselves, right?
Right.
And so that model, when I don't think people have really thought that through, but that model in and of itself is designed to screw gym owners one way or another. And so like my approach to that is like, how do we build a ClassPass that is for the gym owners and that makes the gym owner and the gym member connection stronger? And we play a role in it, but we're not the extractionary force. You know, does that make sense?
Mm-hmm.
So the more and more you actually look into everything that's happening in gyms, and probably all small businesses across the world, there's these software companies and service providers that come in and they're extractionary. They're like, we're going to sell you this thing, but somewhere hidden in the process is like this massive extractionary force that takes economics out of the gym, which I'm just not down for.
Yeah. Okay. Yeah. I mean, that would that would definitely set you apart from those that are. I mean, that feels just slimy. That ClassPass thing.
Yeah, I mean, at the end of the day, this is what it is. You just follow it all the way back up chain, and it's like I report to a board of directors. Those board of directors set the precedents for the company. It's my job to execute the board of directors' wills. Most software companies are owned by private equity companies whose sole responsibility is to return money to their shareholders. Mm-hmm. So those board of directors' objectives are maximize revenue. My board of directors, their directive to me is maximize value, because they're Warren Buffett disciples. And their opinion is, if you play an infinite game and you maximize value across infinite time, you will make more money than you can deal with. But let's focus on the input of it, which is making the value happen. And that's why you see a lot of companies, they do a lot of rob Peter to pay Paul stuff. You see it in the public world a lot. Like they pull all their revenue forward. They just barely beat their earnings, and then the stock goes up. And then the next quarter they're screwed because they pulled all their money forward and now they got to do it again. And they keep robbing Peter to pay Paul. That's what happens in a lot of these companies. Whereas we're the other way around. We keep focusing on delivering value, and we always keep setting ourselves up for better success because the value just snowballs. You know?
Yeah. And I can say, as a customer of many different softwares in the past and currently, you can tell the companies that actually care about putting the client experience first.
So clear.
It's clear as day, you know, from the very first time that you sign on and are welcome to the platform, or from the first time you hit the support button, or their willingness. For me, the big thing is the willingness of the company to educate you on the big, robust piece of software they just sold you. Like, that's the biggest thing, at least for me personally, where if I don't get the education right off the rip, I'm probably going to churn in a couple months because I'm not going to figure it out. I know I'm not going to be getting my money worth, and I'm just going to be angry.
Yeah.
So what's that look like at PushPress in terms of the education side of things for when you onboard somebody? What's that process look like, and how do you make sure that they are satisfied right off the rip?
Yeah. So, and again, I'm gonna spin this in the lens of like audience wanting to start maybe a software company. I think one of the differentiating factors we had from the get-go, again, a lot of the stuff is going to tie back to the fact that I was a gym owner. And so my advice to a lot of people looking to start a business, do something that you not only have a unique advantage of like understanding the industry, but that you're passionate about. Because I thought I would have built the company and sold it before 2019. And here we are in 2024, and I'm just barely getting started. Like it's going to take you 20 years longer than you think. So you might as well love what you're going to do, right?
Yeah.
Anyway, the one beef I had with a lot of software, I would get in and I'd be like, hey, how do I do this thing? Like I've got a customer in front of me and I'm trying to sell them a package right now. What do I do? And then the answer would come 36 hours later. And that person either joined or didn't join or whatever happened. And 3 days later or 2 days later, I would get a reply and I'm like, it was almost a slap in the face.
Yeah.
Like, why even reply to me at this point? Like this was so long ago. I've had 18 other problems since then. So kind of our mandate from the get-go was like, we actually see customer support as part of our product. Customer education is the other end of it, is actually one of the biggest problems in small businesses because it's like, you know how to do fitness really well. You don't really know how, like what a cost, a P&L looks like. And you don't know how to do budgeting. And you don't know like what retention metrics look like and what good churn looks like. And all this stuff that running a business means, you don't know. So we've actually created a system called Push Start, which is our education series. So it's like you want to start a gym or you want to go through the graduational steps of running a gym. We've actually built a whole educational series of like, this is what the early days of opening a gym looks like. These are your first year. After your first year, we want to start thinking about bringing on partners. This looks like when you want to sell it. This is what it looks like. All of that's so important and critical to actually running a gym, but it's either non-existent or you have to pay a business coach a lot of money to get that done. And a lot of people aren't in the position to do that.
Yeah, absolutely. And I think when you have a piece of software where the company is willing to help educate you on it, it shows the buy-in at a different level compared to a lot of different companies who maybe they do it, but they just don't do it nearly as well. And that's a huge sticking point for a lot of customers.
It just goes back again to the whole value versus revenue thing. It does not help us revenue-wise to create Push Start. But if we create more successful gyms in the long run, so there's a quote I like, it's called being long-term greedy. Like in the short term, it does not help us at all to spend a bunch of money, have people employed to do educational stuff. But if I can slowly create more and more savvy business owners who last longer, who make more revenue, who don't churn, who refer their friends, it's building the snowball over time, long-term greedy.
Yep. It's all about the LTV, the lifetime value. I mean, I do the same thing in my own business because it's, what am I doing if I'm just bringing you in here and I'm just going to piss you off and you're going to be gone in 3 months? Like what type of business is that? And that's how so many businesses operate, and it's infuriating. So I love to hear that PushPress is all about building the value instead of just revenue. And the thing is, when you build the value, the revenue will come, right?
That's the beauty of it. It's so simple. And I don't understand why every business isn't run that way, but they're not.
Right, exactly. I think a lot of it is just impatience, right? People want the revenue. They want it today. They got to have it right now. And it's like, there's ways to do that, but it's not a great way to run your business.
The problem is, again, I think of all these things in very black and white. Like it's a slippery slope one way or the other. You can't focus on revenue and not continually want to keep pulling things forward. And the more you pull things forward, the harder tomorrow is, right? And that's when you start doing shady because like you got to backfill tomorrow. So I got to do this weird deal that's going to trick some people. And once you've done that, you got to do it again, but to the next degree, right? Where the other way around is like, if you just keep backfilling value, again, you just keep putting snow on that snowball and it keeps piling on itself. So I think when we think of business, we always go back to like, how much money did I make? How many members, like it's always an output value, right? How much money did I make? How much members do I have? What's my next month revenue? Whereas opposed to like, if you start thinking in terms of the inputs, that's the slippery slope of like, I try and keep my team focused on the inputs as much as we can.
Yeah. Yeah. I love that. That's a great point. So bringing it back a little bit more towards as you were actually building your tech company here, you mentioned a few minutes ago, your first two clients, well, your first one was one of your gyms, and your second one, you felt like kind of fell out of the clouds, which was great. You said getting to 100 was really hard. What was it about starting a SaaS company and launching it and then getting it to 100 customers? What was the most difficult part about that, or what was that journey like for you?
I will say, let me preface this with an epiphany I've had recently is the harder thing you solve, the more value you create for the world. And money is an output of value, as we've been saying. So In hindsight, it was great that we solved the hard problem because now the revenue is the outcome of all of that. We're creating more value. But in today's day and age, you can actually build a micro SaaS that solves a really thin problem, very particular problem, very niche, and grow that to $1 million in revenue and have almost no expenses, and that's amazing. Totally different.
Mm-hmm.
But for us, we built the system of record for gyms, which included scheduling and member management and payments and waivering and documentation and contracts. And like there's probably a dozen companies that have been built into billion-dollar businesses that have built a feature that we had to build for free in PushPress, if that makes sense.
Mm-hmm.
Like DocuSign, we had to build waivers and contracts, and DocuSign exists, but gym owners don't want to spend another 35 to 50 bucks a month for DocuSign. So the fact that we had to build so much stuff was overlooked to me at the time about how much stuff we would have to build. It is very hard to build all that stuff and keep it all very simple and congruent and easy to use. So that by and large was the reason going to 100 is tough, because we would get a lot of at-bats, talk to a lot of people, because I was, again, embedded in the gym ownership space. But it was like, oh, well, you don't do recurring appointments where they can book it. They can self-book every Sunday at 8 a.m. and it carries off into infinity. I can't join because I need that for my private training gym. Oh, your waivers don't include a PAR Q form. Well, I can't join. It's like everyone had a very particular set of things that they needed, and we couldn't build everything. So in the first 4 or 5 years, it was just like hearing all of that and building towards the most noise, mm-hmm. right? But yeah, it's you could look within your own businesses. It's like there's 80% of the stuff is very common. Anyone could do it. And then it's these last mile things where it's well, my whole business relies on a coach being able to check someone in from a park or whatever. So I need a remote check-in app on my phone. Okay, well, there's another $1 million of development to spend. So for that one thing, so,
wow.
So it was that kind of stuff we're looking at, right?
Well, and I get that, having worked with so many small business owners especially in dealing with technology, we deal in marketing systems, but there's so many hundreds of thousands of apps and, ESPs and softwares out there that can do a certain job that this business owner needs. But when you're talking, especially smaller businesses, in the 1 to 10 million range, the smallest of small businesses, maybe even 500,000 to 5 million, there's very particular things that these business owners need, want, and or currently use, or a lot of times it's jerry-rigged together right now, right? Or they have one piece of software that does it, they like it, it does it pretty well, but there's a piece of it where like you said, it doesn't do that last mile. So that can be a very frustrating part, and I totally get how on your way to your first 100 clients, you ran into a lot of people that said, I like this, but because of this one thing.
We still get it to this day, but yeah.
So what does that look like when you were building out the technology? How did you triage? Say, I guess tell us, if you can, how many different things did it do when you first launched? And then how much building after the fact has happened in the years since?
I wish, what? I kind of want to go back in time and see a version of a 2013 PushPress app. It was probably people, member management, very bare bones, a very simple dashboard. God, I don't even know what the dashboard was a report. So we didn't even have a reporting section. It was the dashboard was a report, which we learned really quickly was bad, because so many times you're in the gym signing up a member, and the first screen that pulls up is all this money you're making, and members are and you're just get this off the screen as quick as possible. So it's probably member management, billing. We launched with a concept we called landing pages, which was kind of our technological breakthrough at the time, because that was when squeeze pages and ClickFunnels and all this stuff was being a thing. So it was actually creating these really efficient landing pages for people to purchase through. I think we launched with products, so you can upload products to sell. Not a whole lot more. We didn't have a member app. We didn't have any type of workout tracking or publishing. We didn't have robust reporting. We didn't have documentation, waivers. We didn't have a lot of stuff. Yeah.
So I guess that leads to my next question of what's your team look like? I guess from inception through today, or maybe let's start where you guys are at today. And what does it take to have a company like yours and have the right people doing the right things to build this awesome piece of software?
That's a really good question. So as you grow to a point where as a founder, you do everything, which is not scalable over the long run. So you start to hire people to help you. And where I think the hardest place for founders to let go of things is, as you start to hire people, you gotta not do that job. And I think founders are wired a little bit differently because we're used to selling and marketing and doing customer support and writing code and
All of it.
everything, all of it. But actually, what is required when you start hiring people is somebody to think about organizational design and process, which generally speaking, I don't believe is in the archetype of most founders. Not me. Maybe some founders, but definitely not me. I'm a chaos founder, meaning like, give me a task to do, I'll go do it. Give me a imagination, I'll make it better. But sit me down and think, create a process on how department X talks to department Y and what type of process flow needs to happen to get the job done. Not me.
I'm right there with you, Dan.
So I think that's one of the hardest things as you start to grow your people is the people actually make it messy. If you don't give them the proper framework to build the company with authority and autonomy, like without you as the founder butting in and just overriding them, but also so that they know how to work with the people across the hall and not start fighting with them because it's like, oh, you just threw this over the fence and you didn't tell me what to do and now we missed the deadline because you gave it to me too late and all that kind of stuff. So that is a huge challenge that we're figuring out now.
How did you, I guess, knowing that about yourself, I guess when you first got to that point in your business, what was your first step to get over that hump? Did you like hire somebody to help you do this? Was there a business coach involved? Did you just kind of figure it out as you build it as you fly?
You build everything as you fly, I think.
That's true.
Because this
That
is
never
all a
ends.
personal journey. I don't think I personally realized my own quirks, we'll call them, until we raised our Series A, because that's when we really had to hire some great people. And it also when it became clear to me that my job needed to be more upward, like talking to the board, managing the investors, and not building product. Like I actually wrote code, I think, until we raised our Series A, which was only a year and a half ago.
Wow.
Because it's just hard it was hard for me to take myself out of the day-to-day work. To be honest, like one of my early hires, our CRO, was a Marine and was like I didn't even realize this at the time, but he was extremely organizationally detailed. He knew how to build process. I remember him coming to me in probably 2017 with like org chart layout and like, this is how it's going to work and da 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 da. And it was even too much for me then to even just like digest. So that was a mistaken hire. It wasn't intentional. I think only recently, probably in the last 18 months, I've actually come to understand myself well enough to say like, I need these type of people around me because I need someone to tell me not to do this. And I need someone I can just hand this off to and they'll do it because I know I'm weak in it. And I do think that, at least for me, that part of the journey was very difficult because it makes you sit down and look at yourself and go like, what do I suck at?
Yeah.
Even though I want to be good, what am I just not good at? And how do I handle that?
I think that's a huge like unlock moment for entrepreneurs. And speaking for myself, in the last year, I've had probably 4 of those where just in this journey of building a business, and I've been at it 7 years, so not nearly as much as you, but you find at these, kind of these plateau moments where it's like, oh, okay, so that's what I'm bad at, or that's what I do not enjoy. There must be somebody out there who can do this way better than me and loves doing it, right? Like you just kind of hit these walls where it just, the entrepreneurship smacks you across the face. And it's like, oh, okay, now I know that about myself. It's just a never ending journey.
Yeah. I don't think there's any fault in every entrepreneur. Like I think the founder type person, probably like you and me, there's not a fault in trying to understand everything well enough. Like I'm always around, like, tell me why you're doing that. Show me your model, like teach me. But you've got to get to a point where you're like, you can't be the one who owns every ball on the tree. Like you got to give like my CRO actually has this term, you got to give up the Legos. You got to trust other people to play with your Legos. So
I love that. That's as I'm literally trying to teach that to my 2.5-year-old son. Hey, no, we need to share. Your sister can play too. It's the same thing in business.
I think it was a book he read because that's the whole concept is like you put a bunch of kids around the Legos. It's like either some kids share, some kids don't. But like in a company, you've got to build a company where everyone's willing to share so you can build one, nice Lego set as a team.
Right.
Yeah.
I love that. That is a great analogy. I hadn't heard that one before. So what does it look like on the leadership team? You mentioned your business partner, and you're the CEO there. So what's your business partnership look like? What is I guess if there's a C-suite involved at PushPress, how do you guys have that manufactured?
Ooh, here's a good tip, for, again, like earlier stage entrepreneurs. I think a common trap you can fall into, especially if you have a path towards like getting funding, going the venture route, and or growing to like a 10 million plus company. Resist the urge to overtitle people. So my C-suite has shrunk in the last 2 years, but I think it's very common to say like, hey, you know what? We can't pay you what you're getting paid at this company you're at now. I know I'm super psyched you want to come over and work for us, a tiny little company. We'll make you the CTO. But huge mistake, don't do it. Because if you have the path to scale, eventually you're going to get to a point where that person probably isn't good enough because they were able to solve the problem at like 500K, but they're not going to solve the problem at 12 million or something, right? Mm-hmm. And when you do that and they're the CTO, the only option you have is to fire them because most people cannot handle being downgraded in rank. Because the only option you really have is to hire someone over them. That's actually the most empathetic thing to do, because if that person's capped out, they're gonna hold back the whole company, cause a bunch of friction. And the only way to get them to learn how to be the CTO that they need to be, that they want to be, is to hire a real CTO or even a VP of Eng probably over them, and have that person work with them to teach them this is how we do it, because they just haven't seen it yet. Because it's usually only the person who hasn't been a CTO who wants to come and work for a company to be the CTO.
Right.
You know what I mean? But because they haven't been a CTO, they're capped for sure, or almost guaranteed. Huge lesson to learn. Like I had to do that 3 times now, where I had to replace a C person. I had to replace a C person with a VP, but a really legit VP. And then thankfully all of my C people were gracious enough and humble enough to say like, I will work under that person and learn from them. Because I kind of sold them that, told them that idea. But I can see that if somebody has ego, they're gonna be like, you got to fire them, which sucks because, they're not necessarily bad people. You just mistitled them.
So how do you properly title?
I think you always give yourself room. So what I didn't know at the time, again, because I'm not organizationally minded, C-suite, then you got like vice presidents, then you'll have directors, right? And then you got this ambiguous head of. The head of is a good way to do it because head of could fall above a director, below a VP, above a VP. It can fall in a bunch of different places because it's kind of a new title. Mm-hmm. If not, I would say a VP is a safe place to land because it's a pretty prestigious title, but you can always go SVP or C-suite, right? So you have 2 ranks that you could insert above them if needed.
Okay. And that's all about just giving you flexibility, because as much as people may want to say that titles don't matter, I don't care about title. At the end of the day, the title totally does matter.
They totally matter to people.
Yeah. And and different strokes for different folks. But for the majority of people, like we all have some level of ego, right? And especially in the C level, like I think there's a lot of that where the title absolutely matters.
So, and here's the fallacy is a lot of people because where it does matter is on your next job. Mm-hmm. So if you go to apply to the next job and you're like, oh, I was CTO of this company, right? But what will happen is anyone with any type of hiring chops will be like, oh, you were the CTO of a 500K annual revenue company. They'll automatically know what's going on. So it actually looks better to say I was a VP or a director of engineering at this early stage company, and to say I took them all the way to here and now they've grown. Like that actually looks better, but people don't understand that, because now when I look at people's resumes, I was like, oh, he was the CTO, like of what company now? Like, oh, okay, that's a little. I now have to ask questions about this. It's questionable.
Yeah.
So, but that's why the titles do matter. And I think as long as you set the precedence, the problem is once you set a C person, then everyone that comes in is like, well, he's CTO. Why can't I be CRO? And why can't I be CIO or whatever?
Right.
So you just set the precedence early of like, I just don't hire over a VP. And there's always a growth path for you to grow, but that is the highest title. You can call it, that is the chief of engineering is my VP of engineering right now. There's no one above you. It buck stops with you.
Yeah.
But the title is not going to be that, that's where I would redo it.
Okay. I like that. That's a hot tip.
Yeah.
You mentioned you had a Series A. So at what point did when you started your Series A, have you had more series, and what's your story been with your series of investments?
We just closed our Series B in October. So two months ago.
Okay. So how much do you guys raise in your series?
The B, we got 20.
Okay. Wow. Yeah. Wow. All right. So what was the process for you leading up to saying, hey, we want to go get a series, or we need one? There's a whole lot of stuff I'm even unaware of when it gets to that type of level. So kind of walk us through what led to striving for the Series A and now onto your Series B, and what does that world look like?
Yeah. So in general, once you take a lettered round, seed does not really count. But once you take a lettered round, you're pretty much signing up to be on the burn and raise hamster wheel. There are very few venture capital firms that'll be like, you take my money, hopefully we're the last money in ever, and go and build a profitable company because they know that's going to take us slow. It's going to be slow if you don't burn. And if it's slow, it goes against most investment companies' theses because they've got to return money back to their investors every 5 to 7 years. Like these funds have to return money. So in that lens, like I actually have a lot of, I wouldn't say negative things, but a lot of skeptical things to say about the venture community in general. It is not made to be founder friendly. And I actually, it's funny. So when we started PushPress, I thought it'd be easy to raise money because I came up from the venture world. I worked for a lot of companies that honestly, I was like, how did these guys even raise money? This is the craziest idea ever. So I thought it'd be easy to raise money. Turned out it wasn't. It was really hard. But once we got to the point that PushPress was proving itself, people did want to invest in us. But as I started talking to investors, I was like, wait a minute, this kind of goes against my ethos of being in defense of gym owners because now they're wanting me to just press for revenue.
Mm-hmm.
Like the tables were starting, like what their weren't in line with my philosophy. So we never took money there was a chunk of time where we could have taken money, but we didn't. We ended up finding an investor who actually completely aligns with our line of thinking, value over, that's what I was saying, like our board pushes us for value. When I show up at the board, so most CEOs, when they show up at their board meeting, they get their teeth kicked in because they're not growing revenue fast enough. Where's the money? How are you going to make money next year? Blah, blah, blah. I get grilled over, why haven't you launched this new feature? You told us that the customers would be more happy about this thing. Why aren't they happy? Like they're so focused on customer happiness and value, which is good. It's a good aligning force for me.
Mm-hmm.
So anyways, once you sign up for the series stuff, you're basically signing up, or the lettered, you're kind of set, you're signing up for, I don't want to call it the hamster wheel, but let's just call it that because it's easy to imagine. The hamster wheel of fundraising. You raise money, you set a growth target for the raise period. Like, okay, well, we have 2 million in revenue now. We expect to double, so it'll be 4 million, 8 million. We're gonna have to raise money at 8 million. And then at 8 million, we'll raise 3 times more money. Like we raised 10 million then, we're gonna raise 30 million then, but we're gonna have to like almost double again. So we'll go from 8 to 16 to 32, but we'll be out of money again and we'll have to raise again. And you have this hamster wheel. Why is it set up that way? It's because the investment companies, they do mark to markup on their investments. So it's almost like the public market. Like you can look at your stock value at any given day and be like, oh, we're up 30%. Well, in the private markets, they don't have that. But when you raise another round, they can go like, oh, we invested 10 million at 10 million and now it's 30. So our investment's up 300%, 200%. And so they can mark up, they can send out a report to the shareholders and go like, oh, this investment's up 200%. If you don't raise money, they don't get that markup, right? So they actually want you to burn and raise every 2 to 3 years. So they can get that markup. So they can report back to their investors. The problem with that is if you don't hit your numbers, like if you sign up and you raise 10 million and you're like, we're gonna go from 2 to 4 to 8, and you come in at 5, you almost can't raise money. Because over 2 years, nobody really wants to invest money in a company that's only grown from 2 to 5. That's like 50% a year, maybe less, 40% a year, right?
Mm-hmm.
Not investable anymore. So what happens? You built this whole company around a burn profile that cannot support not raising money, but you can't raise money now. So now you got to lay off all your whole staff and pivot into something more sustainable, right? So it causes a lot of pain. So I think honestly, for most founders, raising money is probably not the best idea, unless you find investors like ours. They have to align with you.
Yeah, so it sounds like you had to search to find the investors that align with your ethos, because that was one of my questions. Was it feels like taking on investors might go against the grain of what you stand for, but if your investors are on board, then that makes sense. What do these investments allow you to do? Like where does the 20 million raise? Do you guys have it mapped out perfectly as to where X amount of dollars are going into? Is it bringing on more developers? Is it bringing on more marketing? Is it more ad spend? What does that breakdown look like?
Yeah, for us, because we're a value-driven company and a product-driven company, 8 out of $10 is going to go to product development. And this is because we sit in an industry that's fragmented. We have like 30 competitors. None of them are investing in product development. And I think we're at a point in time where we can add a ton of value to gym owners based on some of the technological breakthroughs, AI, some of the stuff that's been happening lately. And just the sheer fact that gym owners have a very rudimentary level of software at this point. So there's a lot we can do to improve the software. So yeah, for us, almost purely to product, if you will. We do still have to grow revenue so that, because we're burning, like this year, we're probably going to burn 9 million next year. So we've got to like still grow the company to a point where like in 2026, we don't burn 9 million a year again. We've cut into that by growing the company. So like there's some responsibility that we have to do. We can't just burn the money and not try and bring it back, or else we're going to destroy the company for the customers in the long run.
Right. And you still need to have margin.
Yeah. Well, I mean, technically, because we have margin no matter what, but because we're building to burn, it's just it's all spend anyways. You know what I mean? But yeah, eventually, in order to become profitable, you have to have margin.
Right.
Which means you can't lose sight of the efficiency of everything that you're working on as well.
Right. Okay.
Yeah. So if you think of it as an assembly line, it's like we're building cars. Right now, we're spending way more money to get more cars out in the market, but we're still trying to like ratchet up every aspect of the assembly line. So every car is produced cheaper, but better at the same time. So that eventually when you get to the point of profitability, you have your margins baked in and you can be profitable.
Right.
Yeah.
Okay. So how does the marketing and the sales aspect look at PushPress? Do you guys have a sales team? Do you rely more so? You said, you build the value, the people will come through referrals and through word of mouth. What does the biz dev look like for PushPress?
We do have a sales team. They're amazing. Everyone on my sales team, anyone customer facing, sales, customer support, onboarding, customer success, even our SDRs, who are the people that kind of like look for sales, they've all come from the gym industry. Most of them have owned a gym or they're a coach at a gym. We do that intentionally because it's like when you get on the phone to talk about software with the gym owner, it's just so much more impactful when it's like, this is how we do it at my gym. Let me show you. We do this. Mm-hmm. As opposed to a lot of, again, going back to way back when, I was talking to people on the phone at my first gym and I was like, you know nothing. Are you in college right now? Like you know nothing about owning a gym and it's clear, Yeah. So we kind of went that way with it. So anyways, yeah, we have a sales team. The goal was to be product led, meaning like no sales team, product kicks out so much like people can onboard. But what we realized is there's a safety net in talking to someone. Like you actually want to get on a call with somebody as a small business owner because you're kind of building a relationship of trust. Mm-hmm. And it's like, I'm busy. Can you just show me these things and just walk me through it? I don't have the time to figure this out on my own. I hear a lot of, I'm technology stupid. So I don't even believe that I can get myself onboarded on my own. So it's like, we're never going to get away from having a sales team. Mm-hmm. But the idea is to make the product easier and easier and easier, faster and faster and faster. So the sales team can just kind of blow their minds on a call and just be like, look, you got it. Like, and we have an onboarding team that will take you through all the rest. Like, let's go.
Yeah. I think as a consumer, as a business owner who's had to deal with vendors like this, it's like, I don't have time, but I'm making the time to learn this so I can do what I need to do. And then, or teach my teammates how to do what they need to do with this. And maybe I'm old school, but I agree with you. I have to be on the phone with someone or on a video chat, one or the other, where I'm connecting with someone who's at the place that knows everything about this product and who can answer my questions, no matter how silly they might be, because I truly don't know. And once you teach me, I can do it. But at companies where that's not prioritized, it's a huge red flag for me.
Yeah. And the funny thing is like, I'm the opposite. I'm like, if there's a free demo on any software, I'm in it, I'm kicking tires, I'm playing with it, and I will make up my decision pretty quick. And this is like, the point to this is like, we have to be careful of our own biases, because my bias when I first started the company was like, everyone's like me, I'm a rational person. So everyone would want to do that. And what I learned really quickly was like, almost nobody wants to do that. I'm in the 10 or 20% of people who are crazy like that. But we still have to leave the door open for those people. So it's like, we try and get people, whatever, you want to meet people where they are. Right. Yeah. So there is the way to like self-serve yourself, and there is the way to just take a fully handheld guided tour.
Exactly. You got to be available for either end of the spectrum, because the 100% of people will be somewhere on that spectrum. You got to meet them there. I love that.
The one thing I do want to say, because this is like, everything goes back to this, even for me to this point, every decision you make like that comes with a cost. So it's like, what are you willing to give up? So for that, if you're going to give 2 tours, you have to make like the funnel simple. You have to be willing to invest in 2 different ways, which, constrains your resources. So I think as an entrepreneur, like I'm a glass half full guy. So a lot of times I'm like, yeah, and do that and do that, do everything, do it all. But my team started coming back to me like, well, you have to pick one. Either we do this or we do this, because we don't have enough time or money. And so you have to really start to realize like every decision you make, even if it's a core value, like customer first, then at some point you're gonna have to choose between a customer and an employee. And if you say customer first at all costs, you're gonna fire an employee over them. Is that the choice you're gonna make? Like you have to like be very intentional because everything comes with a cost at some point.
Yeah. Okay. I like that. I like that. Well, Dan, man, this our time has flown past here, so I want to make sure you're a busy man and get you back out in the world of doing what's up for PushPress. If you had one piece of parting advice for our listeners out there, especially maybe if our listeners out there are in the SaaS world or thinking about creating their own product or getting into this type of business, if you could distill it all down into a piece of advice, what would that be?
Oh, I think this applies for anybody, whether you're just as long as you're aspiring in a career, in a new job, in a building a business. It's this concept of curiosity, relentlessness, and first principle thinking. So it's like, don't just do what everyone's done just for the sake of doing it because that's how it's been done. Question things, be curious. Realize 80% of the time your curiosity is going to be wrong. So don't like let that candle burn you enough where you quit. But have first principle thinking and thinking again, that kind of goes back to the beginning of like, why is this even the case? Like, why do car doors open this way? Why can't it open this way? And like think through these things. I think those are the markers of people I look to hire because you give me someone with like those traits, especially like the relentlessness end of it. I know there's something there that can turn into magic if you just give them the right environment. But a lot of times people are like afraid to make a choice, afraid to take a risk, or the first time they fail, they're like, I knew it. I knew I was wrong. I should just go back to doing what I was doing. Like those are not like you won't survive in business that way. You've got to be first principled, curious, and relentless.
I like it. I like it. I think that's a perfect place to bookend this one. Dan, this has been fantastic. Thank you so much for joining us. If anybody out there listening today, if they want to get in contact with you, if they want to check out PushPress, connect with you, look at your stuff, where's the best place to do that?
Yeah, so pushpress.com, kind of like it sounds, pushpress.com is the company website. All the stuff about the company is there. Pushpress.com/Dan is kind of like a landing page, if you will, for like things about me, how to find me more on the internet, blah, blah, blah.
Okay, awesome. And I word on the street is you got a fairly new podcast out there. I want to make sure we spread the abundance here. What's the name of your podcast and can people tune in?
Ooh, we had a long debate on the name, and we came up with the very boring name of the Push Press Podcast.
I like it. Hey,
Just
boring might be
straight to the
simple,
point.
and that works.
Yeah, and
Okay.
so it's going to be, or it is out on all the places you probably will listen. But if you go to pushpress.com/podcast, probably it'll also have episode breakdowns and all that kind of stuff there.
All right. I love it. Well, thank you so much, Dan. This has been an absolute pleasure, and I wish nothing but the best for PushPress as you guys continue to move forward.
Thank you so much. Really fun.
All right.